Hello, it's Friday, the 6th of February, 2009, and it's the end of another interesting week here in the markets. So hopefully it was a profitable one for you. The market was very bullish here, obviously, today. The NASDAQ 100 finished with a gain of 80 cents or 2.6%. You can see that we didn't get up to the year highs yet, at least, but the pattern is looking a lot healthier, particularly on the shorter term time frames. We were observing this resistance here at about $30.80 yesterday, and the market took off right from the start and really never looked back. It struggled a little bit with the VWAP early on, and then tested it later on in the day. But clearly, the buyers had control all day in here, and it was a very bullish session as it broke past that level. We were looking for the next potential upside right here at about 31.20, and then a test of the year highs, which of course are about 31.60 or so. Back to the daily time frame, we can see here, if we look at the Fibonacci, that basically from the election high to the year lows, that's where that resistance also was showing itself. And we had seen the downtrend line on this 30-minute time frame broken basically in that area as well. So the NASDAQ was the clear leader this week. It is up for the year. Better than 5% actually right now. The S&P is down about 3% for the year. Financials are still down 20%, but when it's all about trading, it's a bear market is made for trading, and you got to get on these rallies when they show themselves, and can't be early on the short side, because if you are, obviously it was a painful experience today. So we'd been seeing the encouraging signs. We're getting a little extended here. We're getting up towards these high areas, higher levels from earlier in the year, but again, let's say we break past that, then what's next? We have to be aware of all potential scenarios. Breaking past here, and this is basically up towards about $32 a share. Breaking past that level, then we can look a little bit higher up there. We did look also this week at the VWAP for the year, and that's basically down near about 29.72 right now. So that's coming up as well. We can look at, let's say from this gap lower. Even from those lows, we still have, and let's just pull this up a little bit to see the date, early October, we're above those levels. So we can go back. Actually, let's do this. Let's go back and see where we can draw a VWAP that kind of comes to where we are to today's close. So basically, what that means is, what I showed is basically from this point forward, basically the average price that the NASDAQ 100 has traded at is right here at this level. So we've obviously seen a lot of volume down in this area. And that makes it give us a better case for the bulls moving forward. And again, not to sound too bullish, because when we look at the weekly time frame, it's still a mess, but we do see a higher low in here and this level of resistance. If they don't scare you out, they'll often wear you out. So we have to be aware that possibly we're going to turn sideways in here as well. You have to be aware of anything. So really, realistically right now, what we want to see early next week is that this 3070 to 30, let's say we want to see 3070 holding as support. If the market can hold support at about that, this level here, then perhaps we can continue to build. We are getting extended, so you want to be careful about chasing things. But again, it's encouraging action, and hopefully you participated in it. The financials were up 7.6%. We had seen, of course, we've been focusing on this $9.40 level, which has been important as the closing low from last year, and also this level of resistance that we've seen this year and just recently. On the 30-minute time frame, we'd been observing this downtrend line that was coincident with that $9.40 level. So obviously we pushed past that right from the open, and basically it really never looked back. Just a slow grind higher throughout the day. Nothing really dramatic, but again, just a slow grind higher with these higher lows and higher highs in here. And we're getting up towards looking for the next potential level where the sellers ought to be congregating. I think this gap level is one of them in that round number, just about $10 a share. And above that, the next important area will be $9.40. We obviously want to see 940 hold as support. If 940 can hold, then it's going to add to the to the possibility that we can continue to move higher here. We do have a rising 5-day moving average as well. Yesterday we looked at this is an inverted head and shoulders pattern, breaking past that 940 level. The height of that was about 80 cents. So breaking there gives us a price objective of $10.20, which basically puts us right up to this gap area. So just some levels to be aware of. And again, we want to see 940. That's the major level we want to see hold as support moving forward next week. Semiconductors were the biggest group this week. They added to their gains again here today with a 2% gain. They're right up near those year highs as well. The semiconductors this week were up 11%, bringing their year-to-date performance of just about plus 7%. And this group often leads the NASDAQ, which is what we've seen, and the NASDAQ often leads the rest of the market. So that's why it's worth watching these markets. This level, though, the year highs were important, also back in here as some support and resistance late last year. So right around that $19.50 level, we're obviously closing in on it very fast here. So we're getting, as I said yesterday, we're getting up towards the tops of these ranges. We want to be careful about chasing stocks. Instead, we want to wait, for pullbacks if you're not involved, or looking at the very short-term time frames and buying little consolidation breakouts, after pullbacks and that sort of thing. But we have, we had a little selling late in the day, but we still have a pattern of higher highs and higher lows in here. I think the most important support going forward next week is going to be about that $18.30 level. That's where we'd found buyers yesterday. Below that would be that $17.60 level. So it's going to continue to be interesting. We're up near the top of the range, so you have to be very defensive. Don't let your confidence move, higher just because prices are. Instead, be very defensive. Make sure you have a strategy to lock in gains, because every one of the rallies that we've seen has failed, and there's no reason to think that this one may not either. We have to be open to the possibility that it may continue higher, so you raise your stops if you're long underneath these higher lows. But the benefit of the doubt still goes to the seller, just because we're in this primary bear market. Great volume in here, by the way, on the weekly semiconductors. We can take a look here. The average price year to date for the SMH has been right there at about 17.5. And if we were to take this backwards and see, how long it's been since basically since this larger breakdown here, basically mid-September, that's about when we're, where the average price is right now. From about mid-September, this is where we are. So that's obviously looking like an important level. So be aware of that next week. The volume did start trailing off here. As nice as the volume was on the weekly time frame, be aware that the volume is diminishing here the last couple days. And, buyers maybe not as confident. A lot of this, I'm sure, has to do with a short squeeze. I saw let's talk about oil for a minute, because oil remains broken in here. A lot of people got excited. I saw intraday. It traded massive volume and it was down 61 cents today, even in spite of a big green candle. What that means is it gapped lower, but then closed higher than where it opened, but still down on the day. And we saw just this massive volatility in here once again that is just so typical of oil. In fact, I'm putting together a little chart that talks about the volatility of oil. That'll be on the blog maybe this evening. Depends on if I feel like getting it done. But anyways, the S&P 500, let's finally look at that. The S&P 500, it's encouraging, of course. We've been focusing on this level here at 86 or so. It's been a very important level for this market. We saved a much bigger breakdown this week by holding above this trend line, basically. And that's a bad print from yesterday, those lows. So basically ignore that. I don't know why Realtek hasn't cleaned that up. But we're right at the 50-day moving average as well. We do still have a lower high. We haven't breached this high yet. So, things to be aware of. The weekly time frame, Still, maybe this is going to be the higher low, and then we go break past that. It's too early to say. That's more guessing than anything. But again, we got past the 86 level. We want to obviously see that down to about 85 and 85 30 or so. 86 is our first level of defense, and let's just call it 85 80. So we'll give it a few pennies below that. But 85.20, we want to see that hold as support on any pullback. If that can go, then maybe we're going to challenge this next level where we expect the sellers to be. Yesterday I said, basically getting above 86. Maybe we're going to be ready to push for the next potential level of supply to be released at 88. If 88 gets taken out, then this prior support has the opportunity to potentially become resistance as well. The markets remain very volatile, and it's a great environment for trading, but I still don't think it's time to do any serious investments.